Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. We're here today to discuss, does Merrill Edge's Solo 401k now support Mega Backdoor Roth Solo 401k? As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult your tax attorney and financial professional. So if you do have questions or topics that you wish to discuss, please chat those over, as we love to go over questions or topics. In the meantime, we'll get started with today's topic that we wanted to bring and share, which again is, does Merrill Edge's Solo 401k now support Mega Backdoor Roth Solo 401k? And the answer is yes and no. So let's break that down as we go through these slides to understand what we mean when we say yes and no. So before we turn to that though, let's start out with just some quick foundational content, which is just understanding what a solo 401k is. A solo 401k is a retirement plan for a self-employed individual, really an owner-only business. So in order to be eligible to set up a solo 401k, you need to be self-employed with no full-time W-2 employees, specifically no non-owner, non-spouse full-time W-2 employees. So the owner of the business, the spouse of the owner of the business can be a W-2 employee, and the individual would still be eligible as long as they're reporting earned self-employment income with no non-owner, non-spouse full-time W-2 employees working for any business owned by that person or a spouse, if any. So think like an independent contractor, a solo practicing professional, could be a medical professional, a CPA, a realtor, an attorney. Ultimately, the key is that you're reporting that earned self-employment income, again, with no non-owner, non-spouse, full-time W-2 employees. You don't need to have a formal legal entity. You could be operating as a sole proprietor without a formal legal entity. Or of course, you could have an LLC or an S Corp through which you operate your business as long as you report that earned self-employment income. So examples of earned self-employment income would be income, for example, that's reported on Schedule C of your 1040, or W-2 wages that you receive from your self-employed business taxed as an S Corp, or income reported on line 14 of a K-1 from your business that is taxed as a partnership. There's no minimum amount of earned self-employment income that you would need to be eligible to set up a plan. Your spouse or business partner may participate in the solo 401k as long as they are also reporting earned self-employment income, such as their own W-2 or their own Schedule C. You can have a solo 401k even if you have a W-2 job, a day job, even if you're participating in your W-2 employer-sponsored plan, as long as you've got that separate earned self-employment income. Now, a Mega Backdoor Roth Solo 401k is a type of solo 401k that would allow someone to contribute a much higher amount into a Roth account. So for example, you can contribute all the way up to the overall limit of $70,000 or even more if you're age 50 or older for 2025, where those funds will end up in either a Roth Solo 401k or Roth IRA. So that's where you'd have that potential for tax-free growth. So like any type of Roth contribution, the contributions are being made on an after-tax basis, but they'll ultimately end up in a Roth account where they'll be growing tax deferred and then be tax-free if at the time of the distribution, you take what's called a qualified Roth distribution. Now, in order to set up a Mega Backdoor Roth Solo 401k, you first have to be eligible to set up a solo 401k, which now we understand means that you're self-employed with no non-owner, non-spouse, full-time W-2 employees. And then you want to work with a provider like us, like my Solo 401k Financial, that offers a plan that allows for Mega Backdoor Roth Solo 401k contributions. Now, mega backdoor Roth solo 401k is a marketing term. It's an industry term, right? Technically, what one is doing when one makes mega backdoor Roth solo 401k contributions is really a two-step process. They're first making a voluntary after-tax contribution and then transferring those voluntary after-tax solo 401k funds either to a Roth solo 401k or a Roth IRA. So you need to have a plan like ours that allows for both voluntary after-tax solo 401k contributions as well as in-service distributions. And of course, our plan allows for that. So that's the foundation. Then one would want to work with a company like ours, a solo 401k plan provider like my solo 401k Financial, that's going to help you through the required compliance steps and is going to handle the ongoing compliance support. So those required steps are going to be, again, the two-step process of first putting the funds into an after-tax account before they get moved to a Roth. So for example, we help our customers open up the requisite number of accounts at the bank or brokerage of choice. We've helped customers open up accounts at hundreds of different banks, many different brokerages, including Merrill Edge. So this is where we answer that question, yes and no. Does Merrill Edge solo 401k now support mega backdoor Roth solo 401k? So if you open up a solo 401k or an individual 401k directly with Merrill Edge, that means that you're going to be using their plan documents, Merrill Edge's plan documents. Merrill Edge's plan documents do not support the mega backdoor Roth solo 401k. In other words, Merrill Edge doesn't offer a plan that allows for voluntary after-tax solo 401k contributions and then an in-service distribution, whereas our plan does. But even though Merrill Edge doesn't open up accounts using their plan documents that allow for the mega backdoor Roth solo 401k, they will open up accounts for third-party plans. So Merrill Edge will open up a brokerage account that's governed by a third-party plan document. So we've helped many customers open up brokerage accounts for their solo 401k plan that we provide, because we don't hold or have access to any of our customers' funds. We're neutral as far as where the accounts are opened up at. And at the same time, we're very hands-on in helping customers open up accounts at the bank or brokerage of choice, including Merrill Edge. So that's why we say, in response to the question, does Merrill Edge's solo 401k now support mega backdoor Roth solo 401k? Yes and no. No meaning Merrill Edge plan that's provided directly by Merrill Edge's plan, it doesn't allow for mega backdoor Roth solo 401k contributions, but Merrill Edge will still open up a brokerage account for a third-party plan like ours, so individuals can set up the plan with us and then open up their accounts at Merrill Edge. And then lastly, it's going to be important to work with a provider like us, like my solo 401k Financial, that provides ongoing compliance support. Because even though that first step, the after-tax contribution, is not reported on the personal or business tax return, the second step, when you move the money from the after-tax solo 401k, either to a Roth solo 401k or a Roth IRA, that second step is reported. It needs to be reported. It's required to be reported on a Form 1099-R. And we handle that required reporting, that 1099-R reporting, as an optional free service. In other words, no additional charge. Customers just need to let us know about that. We have an online form the customers can submit 24/7 to give us the information we need to prepare the 1099-R. So it's going to be important to, again, work with a company that's going to provide that ongoing compliance support that's going to be required when you're making mega backdoor Roth solo 401k contributions. So let's go through an example of how one would make mega backdoor Roth solo 401k contributions. And so it's going to be good to first start out with understanding what the mega backdoor Roth contribution limit is. And in order to understand what the mega backdoor Roth contribution limit is, you need to understand what the voluntary after-tax contribution limit is. So the voluntary after-tax contribution limit is 100% of your self-employment compensation, dollar for dollar, up to the overall limit. So self-employment compensation will depend on how your business is taxed. For example, for a business that's taxed as an S corporation, self-employment compensation is equal to the W-2 wages that you receive from your business taxed as an S corporation. Whereas if the business is taxed as a sole proprietorship with income reported on Schedule C, you need to run a pre-calculation to first determine self-employment compensation. And we help our customers every day run that pre-calculation. So the pre-calculation is you take your net income, so your self-employment income, for example, after your deductible business expenses, specifically the amount reported on line 31 of Schedule C, less 1/2 of the self-employment tax. So that's what self-employment compensation is equal to in the case of a business tax as a sole proprietorship. Similarly, for a business tax as a partnership, you would take line 14, K1 income, less 1/2 of the self-employment tax, and that's what self-employment compensation is equal to. So again, you can contribute 100% of that amount, dollar for dollar, up to the overall limit. For example, $70,000 for 2025. Now you need to keep in mind the overall limit. So the sum of all contributions that you make to the solo 401k, whether employee, employer, and or voluntary after tax, the sum of those different buckets cannot exceed the lesser of self-employment compensation or the overall limit. So if you're making other types of contributions to the solo 401k, such as employee or employer, this will reduce how much you can contribute as a voluntary after tax. But that also means if you're not making any other contributions to the solo 401k, you could contribute solely voluntary after tax contributions. And as long as your self-employment compensation is equal to at least $70,000 for 2025, you can contribute 100% up to $70,000 as a voluntary after tax contribution that would need to go into a separate voluntary after tax account before it gets moved over either to a Roth solo 401k or a Roth IRA. Now, a couple of other important notes. This voluntary after tax contribution limit doesn't go up if you're age 50 or older. So if you're age 50 or older, you can make additional contributions, but you wouldn't make those as voluntary after tax contributions. You would either make those as pre-tax employee or Roth employee, directly to the pre-tax account or directly to the Roth account. The other important note is that one's ability to make voluntary after-tax contributions to the solo 401k is not impacted by contributions made to another retirement plan, like a day job 401k plan. So the fact that you max out contributions, for example, to your day job 401k plan that's sponsored by an unrelated employer, in other words, you don't own the company that you have your day job at, will not reduce your ability to make solo 401k contributions based on your self-employment income, because those limits apply at the plan level. Now, the one exception to this general rule is the 403b exception. So all contributions made to a 403b, whether employee or employer, together with any contributions that you want to make to the solo 401k, the sum cannot exceed the overall limit. All right, so that's great. So now we understand the contribution rules and the limits. Now let's apply that to a practical scenario. So let's assume we've got a self-employed business that's taxed as an S corporation, and the individual is under 50 years of age, and they have maxed out their contributions to their day job plan. For example, $23,500 for 2025. Their goal is to maximize Roth and or voluntary after-tax contributions to the solo 401k, and they have $100,000 of W-2 wages from the self-employed business taxed as an S corporation. So how much can they contribute to the solo 401k? Well, they're not going to be able to make any employee contributions because that employee contribution limit applies at the employee level. They're not interested in making pre-tax employer contributions, so they could just decline or skip making those contributions. Instead, they can contribute 100% of their self-employment compensation up to the overall limit. For example, $70,000 for 2025 as a voluntary after-tax contribution. And they can make this to an account at Merrill Edge. So they can have one account at Merrill Edge for voluntary after-tax solo 401k contributions, and then have a second account at Merrill Edge for Roth solo 401k funds. So it would be that two-step process. They first make the after-tax contribution and then move the money over to their Roth solo 401k, then invest via that Merrill Edge brokerage account for Roth solo 401k funds, where the gains are going to be tax deferred, potentially tax free. So if they're at least 59 and a half years of age and they've had the account for 5 years at the time of the distribution, that means they're eligible to make a qualified Roth distribution. So they're able to withdraw from that Roth solo 401k totally tax free. So all the gains that accrued in the interim period would be tax free. So that's obviously the big benefit of making those Roth contributions. So when is the deadline to make contributions? Well, it depends. Depends on the business tax return deadline. So it depends on how your self-employed business is taxed. So we'll first start out by talking about plans that were set up before the end of December of last year. So before December 31st, 2024. So if your plan was set up on or before December 31st, 2024, either with My Solo 401k Financial or somewhere else, and now you want to upgrade to our plan to be able to make Mega Backdoor Roth Solo 401k contributions, which keep in mind, you could upgrade a basic plan from Merrill Edge to our Solo 401k plan, and now you can make Mega Backdoor Roth Solo 401k contributions because our plan allows it. So if you set up your plan before the end of last year and you filed an extension for your 2024 tax return, your self-employed business tax return, then you would preserve the ability to make all types of contributions for 2024 by the extended business tax return deadline. So if your business is taxed as a sole proprietorship, maybe an LLC taxed as a sole proprietorship, really your self-employed business tax return deadline is your 1040 deadline. So again, if you set up the plan with My Solo 401k Financial or with somewhere else, and now you upgrade it to our plan and you filed an extension for your business tax return, you'll have until October 15th, if your business is taxed as a sole proprietorship, to make all types of contributions for 2024. Or if your business is taxed as a partnership, it would be based on the 1065 deadline. So again, if you set up that plan and filed an extension, you'd have until September 15th. Likewise, if the business was taxed as an S Corp or a C Corp, it's going to be based on the 1120 deadline, which if you filed an extension and again set up the plan before the end of last year, either with us or restated in the meantime to our plan from a basic plan that was set up somewhere else, you'd be able to make all types of contributions until that business tax return deadline, including extension here in 2025. So that's the first type of debt category when we talk about deadline. The second type is going to be those that didn't set up the plan until 2025. So if you didn't set up a plan until 2025, either with us or somewhere else that now you want to upgrade to our plan, but you filed an extension for your self-employed business tax return, so your 2024 self-employed business tax return, you could still set up a plan here in 2025 or upgrade a plan that was set up somewhere else in 2025 to our plan and make voluntary after-tax contributions, so Mega Backdoor Roth contributions by the extended business tax return deadline. Because you didn't set up the plan until 2025, you wouldn't be able to make other types of contributions like like employee, but you could make at least employer and voluntary after-tax contributions by that extended business tax return deadline. All right, well, thank you so much. I know we got a question. Appreciate you bringing the question. Thank you for your patience as we just finished our thoughts there on those slides. I've had a Schwab Solo 401k for the last several years, and I've had to file a 5500 EZ for the first time in 2023. I created a 401k after-tax account and Roth 401k with your company in 2024 for 2024 at Fidelity, but I wasn't able to transfer the funds until after January 1st, 2025. So the My Solo 401k accounts all had $0 in them on January 1st, 2025. How should I fill out the 5500 EZ? Great question. So presumably that plan was restated from Schwab to our plan, which means that the pre-existing plan at Schwab continued. It was now governed by our plan documents. But it's not as if the first plan was shut down and then a second plan was set up. It would be the same plan. So from a 5500 EZ perspective, you would use the value of those Schwab accounts as of December 31st, 2024, because we'd be talking about the same plan because it was restated. Great question. Thank you for bringing it. Do I need to fill one out for the Schwab? No, so we just answered that question, how it's the same plan. So 5500 EZ, use the value of the account, including the assets, et cetera, at Schwab as of December 31st, 2024. I made a contribution to an after-tax account, which was converted to Roth all in 2025 for 2024. So you can use cash basis for purposes of completing that questionnaire to give us the information we need to prepare the 5500 EZ. So for example, when answering the questions about contributions, you can simply provide information about contributions that occurred in 2024. So even though contributions were made in 2025 for 2024, it's perfectly acceptable to take a cash basis approach, which I would say many clients do, because now that'll be consistent with their account statements. In which case, you can just let us know about that contribution when you fill out the questionnaire next year. Thank you for the good questions. I have a variation of this contribution scenario. W-2 job at an unrelated employer, max out the employee contribution there. An S corporation of which I'm the sole owner employee, which currently has no active retirement plan. I'd like to contribute 100% of my W-2 comp to a new plan for voluntary after-tax. A Schedule C business with a SEP IRA, unrelated to the above business. I want to maintain a SEP for the Schedule C because I only have so much revenue from the S Corp. So that's a great question. So first of all, if that SEP IRA is a safe harbor SEP IRA, then you cannot make contributions to a safe harbor SEP IRA and a solo 401k for the same year. So, but instead, what you could do is you can set up a solo 401k, assuming that there are no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. And then you can aggregate from all sources of self-employment income. So the W-2 wages from the self-employed business tax as an S Corp, plus the Schedule C income to justify contributions to that same solo 401k. And keep in mind that you can only make employer contributions to the SEP IRA. And whereas you can make that same employer contribution to the solo 401k, plus on top of that, you can make after-tax contributions. You wouldn't be able to make any employee contributions because you already maxed out your employee contributions to your day job plan. So in short, one solo 401k with contributions based on income from all sources of self-employment income. If it's not a safe harbor SEP IRA, then yes, you can make contributions to both. But keep in mind, contributions made to the SEP IRA will reduce how much you can contribute to the solo 401k. And of course, the solo 401k, if it's set up with us, would allow you to make those voluntary after-tax contributions. Great question. I filed the 5500 EZ previously using an accrual basis. In that case, it's going to be better to be consistent year to year. We don't necessarily recommend, we just state that either is acceptable based on the 5500EZ instructions. I would recommend you stay consistent though year to year. So you would want to include the contributions made for 2024, even though they were deposited in 2025 when completing that questionnaire. So we're going to be, assuming you restated the plan with us in 2024, then we would, as part of our service, if the information is submitted in a timely fashion, then we prepare the 5500EZ, and we would prepare it under the restated plan name. Now, you would want to give us a copy of the previously filed 5500EZ, because we'll need that to help prepare the 2024 5500EZ. And then in section 4 of the 5500EZ, there's space to refer to the prior name of the plan, etc. So if the business name changes or the plan name changes, then you can note that on that section 4 of the 5500EZ. So it can be linked up to the prior version. Well, thank you so much for the great participation today. We do appreciate it. Please continue to participate. If you found this to be helpful, please like, as that helps us to get the word out to other self-employed individuals just like you, or share it with others that you think might find it to be helpful. As you can imagine, there's definitely a growing number of self-employed individuals, and they might find this information to be helpful as they try to grow their retirement account, etc. Also, you can participate 24/7 in our community, mysolo401k.net/my community. We have over 30,000 members in our community. There's vibrant forums. You can post questions. You can check out our webinars, our library of webinars and videos. Also, please feel free to check out our AI, which you can access for free at solo401k.ai. It's a great tool to find answers to questions quickly, resources, etc. All right, so if you email to support@mysolo401k.net and include the name of your plan in the subject line and or the email body, then that'll help us get it to the right place. All right, well, thanks again, everyone. Appreciate the good participation. Until next time, please continue to participate.